If you've ever put a debit instead of a credit, I'm gonna need you to hit that subscribe and like button. Hey everybody, my name is Ande Paul-Hus. I'm a partner here at RVG Company, and thank you for joining our educational web series. Today we're going to go through the first part of a three-part series called General Accounting for Businesses. The first part is going to be on bookkeeping for startups. The idea for today is to talk about bookkeeping for startups. Now, what we're talking about when we talk about startups is the guy who's just started his business. He maybe has a bank account, maybe starting to do a little bit of activity here, but otherwise really nothing else going on. So let's start off. What is the definition of bookkeeping? Now, the definition per the dictionary is the activity or occupation of keeping records of the financial affairs of a business. So what does that mean? We're really tracking the money coming in, the money going out from the simplest function. The purpose of this video, we're going to talk about two very fundamental prospects of accounting that'll stay with you forever, but in this context, it's going to be the two that we're most focused on. And that's going to be organization and consistency. Organization in the sense that you're going to be organizing transactions by putting them in different compartments that we are going to call accounts, right? And consistency is doing it the same way. And what that's going to help us do is build a historical trend of what's going on in your business. Now, as a new business owner, maybe you haven't even started your business yet. So first things first, let's go to the state and establish your business, either your LLC, your corporation, and get that legally done. And the next step is to get a tax ID number through the IRS once you've established your business with your state. Now that we've got those two things out of the way, what you really want to do is go get a bank account. It should be set up just for business purposes. So we want to keep all the personal aspects of your cash transactions separate from what's going on in your business. If you're unsure about what qualifies as a business account, talk to your tax advisor. And before we go too much farther, if you don't have a tax advisor, this early on in the stage of your business is a great time to start talking to people and see who's a good advisor for you, not just from who can do the work, but who fits with your personality, sees your vision, and understands the business that you're trying to run. Now, before we get too much farther, why does accounting matter? What difference does it make if I keep track of my records or not? Well, for you as a new startup, the cash in and out of your company is really what you're going to live or die by. And what we use as an analogy pretty regular is accounting financial records are to a business what a health record is to an individual. And what it is it's slowly building a historical trend of activity that goes on in your business that'll start to determine financial health and also start to give you the opportunity to determine what's going to come in the future based on that information. So now we've got the business established, we got your bank account together, we know how we're going to keep it separated. What are the ways that we could talk about doing bookkeeping? Well, the simplest way is to do it through your actual bank statement. And that would be just downloading the transactional information from your bank, probably into an Excel document because that's easy to manipulate, and then categorizing income and expenses. If you don't know if it qualifies as one or the other, drop it into an Ask My Accountant account, and we'll talk about that later. Keeping track of this information at this most basic level will get more or less what you need to get done just from the what's coming in compared to what's going out perspective. Now, if you don't know if it's time to kind of step into an accounting software, it probably is. I mean, there's a lot of people that kind of keep their household on an accounting software because it makes life easier for them, and no different for you. You're a business owner and accounting may not be your business, and if that's the case, let the accounting software do its job and make this thing easier for you. At this stage, if you're going to be doing your accounting records based on your bank statement, an ideal software would be something that has a bank-fed transaction list. Ideal situation would be like a Xero or a QuickBooks Online or a Wave. All very, affordable and fairly priced options, around like $30 a month. Super simple is what it'll do is it'll feed the transactions from your bank account directly into the software. And from there, you can go ahead and book it as a transaction and categorize it to whatever accounts you think are necessary. So that method is going to be the easiest way, and that'll qualify what's called the cash accounting method. Now, how often should you be doing this? It varies person to person, business to business. It depends on how tight you are in cash, how fast you're trying to move the cash in and out of your business. Some people want to do it daily. I would say weekly is probably a good idea. That'll give you a pretty good idea of where your cash is at any given moment. At a very minimum, I would say do it monthly. If you get too far beyond that, you're going to start, trying to work your memory against yourself, and that may be a little difficult. Now, as far as keeping receipts and backup information like that for your taxes, it's a great idea. With technology being what it is, there's apps out there where you can keep this stuff digitally, but as simple as keeping a separate folder in your phone and taking pictures of stuff and just keep that information as backup. It may not be the ideal situation for your tax accountant, but at least you have the information handy if we ever need to go and dig it out. And then the last thing we'll talk about before we kind of finish up here is cash method versus accrual method. Now, as I've outlined earlier, the cash method is what we were talking about as far as accounting from your bank statement, which is primarily what we said we'll do with the accounting softwares as well. That method works well. It's simple, it's easy, it doesn't require a whole lot of secondary work. It's very convenient. But it's not going to tell you the story that you really want to see from your business. What it's going to do is kind of keep track of everything as it's already happened. But when we go to an accrual method, which kind of gets into a matching concept of you're going to recognize revenue when you earn it, not necessarily when you receive the cash. You're going to recognize expenses when you incur, not necessarily when you pay that out. And that'll start to flatten these things out and start to give you a historical trend that kind of starts to zero in on your margins when you do make a sale, the overhead it costs to run your business on a long period of time. And it'll start to give you the option and ability to analyze and see what the company can do and what it's capable of. If you need any help with any of the things we discussed, we're here at RVG, we're here to help. There's nothing we enjoy more than watching businesses grow. So please reach out with anything as far as starting your business, establishing an EIN, if you want to establish what accounting software would fit you best. Next time, which is going to be accounting for small businesses, so kind of the next level up from accounting for startups. Hope to see you guys there. Thanks.